How to make money during inflation in 2022. With inflation in the United States at a 40-year high and stock and cryptocurrency markets in bear territory, options are limited. To make money during inflation, start by assessing your financial needs and risk tolerance. Are you looking for passive income today or something that yields returns down the road? This piece examines how certain asset classes may perform during inflationary periods and the interest rate increases that typically follow. How inflation affects the economy. An increase in consumer prices may have an unpredictable ripple effect across a national, or even the global, economy. But before starting, support the channel by liking this video and subscribing to this channel for future updates. On the whole, inflation erodes people's purchasing power, meaning that your money buys less, making it worth less. With less purchasing power, people can purchase fewer goods, which slows economic growth. When there is a widespread belief that high inflation will persist, workers demand higher wages, which can lead to a wage price spiral. Here are a few ways that some people may invest during inflation to either keep pace with it, make passive income, or profit during a later bull market. Number 9. Bonds during periods of inflation. Bonds can allow an investor to maintain her purchasing power. Though U.S. savings bonds may not make money during inflation, they are designed to keep pace with inflation. By contrast, many more speculative assets will lose value at the same time, making bonds a historic hedge against volatility. Number 8. Can you make money on cryptocurrency during inflation? The relationship between cryptocurrency and traditional finance, including the stock market, inflation, and interest rates, has evolved over time and remains the subject of much debate. It is no coincidence that the first Bitcoin block was mined in 2009 during the Great Recession, a period of widespread distrust in the existing financial system. But as Bitcoin has become more mainstream, its price has become increasingly correlated with the stock market. In broad strokes, the more money people have across all asset classes, the higher the price of Bitcoin tends to be. Similar to stocks, cryptocurrency may outpace inflation long term, but short term will dip in price and often will experience significant highs and lows. Number 7. Gold is considered an inflationary hedge. A commodity, gold is often considered a way to retain or make money during inflation, though this is not always the case. In addition to buying gold, a potential purchaser must also consider how to store it, price volatility, and opportunity cost. Investing in stocks or treasuries may be a more stable way to make money during inflation. Number 6. Commodities perform well during inflation. Tangible assets, such as gas, cotton, soybeans, wheat, oil, and copper, tend to outperform other asset classes and make money during inflation. An increase in commodity prices alone can foreshadow future inflation as the price of individual resources tends to respond more immediately to economic shifts. Number 5. Can you make money with stocks during inflation? Historically, equities, stocks, tend to outperform inflation. The average annual S&P 500 index return is around 10% higher even than the 40-year high U.S. inflation rate seen in 2022. In the short term, investing in stocks during periods of high inflation comes with the risk of volatility. Looking to make money during inflation with stocks in the short term? Consider the type of stock. Dividend stocks often underperform during inflation, whereas companies that can pass cost increases on to customers and those whose value is tied to commodities will perform better. Number 4. Making money during inflation with REITs. For those who cannot own a house, there are real estate investment trusts, REITs. A REIT is a company that owns income-generating real estate such as apartments, resorts, hotels, malls, warehouses, and more. REITs pay a minimum of 90% of taxable income to shareholders in the form of dividends. When the value of real estate rises, REIT investors may benefit from increased dividend payments. Number 3. Real estate, a timeless inflation hedge. A tried and true method of making money during inflation is through rental property, which can provide a steady stream of cash. Owning property alone is often considered a hedge against inflation as house prices tend to rise with it. An increasing home value lowers the loan-to-value ratio, so you are, in essence, paying fixed-rate mortgage payments on a house now worth more than its purchase price. Number 2. High yield savings account, the benefits of cash during inflationary periods. A traditional finance high-yield savings account earns 1% APY at the time of writing. Though this type of account will not make money during inflation, it does allow you to keep some savings in cash, which can serve as a hedge during the economic slowdowns that may follow interest rate increases. Number 1. DeFi Savings App, a new way to make money during inflation. Decentralized finance, which differs from more speculative alternatives such as cryptocurrency and stock investments, can yield a consistent return of 3 to 8% APY. 𝐦𝐤𝐤𝐤 is a DeFi that offers free USD deposits and withdrawals, $100,000 in fund protection per user, $250,000 for 𝐤𝐤𝐤, and keeps funds provably in your control through non-custodial technology. That's it from this video. Let us know what you think about the list in the comments section below. If you enjoy this video, please like the video and also subscribe to our channel. Thank you.